Will a no-deal Brexit do more damage to the UK economy than COVID-19? Well, it might well do in the long term. At least that's the opinion of Bank of England Governor Andrew Bailey, coming up in this video. Hi everyone, I'm Martin Bamford, a chartered financial planner and informed choice, and in this video I'm taking a look at some comments made by Bank of England Governor Andrew Bailey. Bailey was speaking yesterday to a select committee, the Treasury Select Committee of MPs, and sharing a whole range of opinions, but the headline grabbing one I think was that he believes the impact of a no-deal Brexit could have worse long-term ramifications for the UK economy than COVID-19. So let's dig into some of his comments, see what he had to say and what we can make of it. The warning from Bailey included this note that he believes a no-deal Brexit would leave the UK economy worse off for decades. Not just months or years, but decades. So a really long-lasting impact on the UK economy. And this is important because we are just over a month away from the end of the Brexit transition period. At the end of this year, we automatically revert as a country to World Trade Organization, WTO rules when it comes to tariffs, when it comes to trade restrictions, unless some form of deal can be agreed between the UK and the European Union by the end of this year. The clock really is ticking on this one. Speaking to the Select Committee, Andrew Bailey said, "I think the long-term effects of leaving without a deal would be larger than the long-term effects of COVID. It takes a much longer period of time for what I call the real side of the economy to adjust to the change in openness and adjust to the change in the profile of trade." Now, this was interesting because earlier this year, I think it was, Andrew Bailey commented he thinks the near-term effects of COVID would be significantly worse than the near-term effects of a no-deal Brexit. And I think hopefully we can all agree on that one. COVID, in the short term at least, is resulting in a massive hit to the UK economy, and that massive hit has to be paid back at some point, sure. But in terms of the long term, the lasting impact of COVID, all expectations are, that will not take more than, say, a few years before the UK economy is back to normal size. However, by comparison, a no-deal Brexit is expected to have quite a relatively small short-term economic hit. But Andrew Bailey here warning that it could take decades before the UK economy is back on track post a no-deal Brexit. And what I found interesting was that during this Select Committee hearing, Andrew Bailey referred to some analysis carried out by Treasury officials years and years ago, back when the UK was weighing up the option of joining the euro. And the view of those Treasury officials was it could take up to 40 years for the UK to adjust, join in a new currency. And he was making references to that analysis and, by way of comparison, saying a no-deal Brexit could take just as long for the UK economy to fully adjust. He said, "It's hard to put a multiple on it, as you say, but I think you're basically right to say that in that scenario, you would expect a longer term effect from the exit trade agreement." So some interesting thoughts there on the potential long-term economic damage caused by a no-deal Brexit. Of course, we are by no means guaranteed a no-deal Brexit. There are still a number of weeks to go. It is in, as I've said in previous videos, I believe, the European Union's best interest to do some sort of trade deal with the UK. If they don't, then I think both partners are worse off. And whilst the economic hit to the European Union is smaller in percentage terms, because the size of the EU economy is that much bigger, in monetary terms, the economic hit would be significantly larger for the EU to lose the UK as a trading partner. So some interesting weeks ahead as we head towards Christmas, not just with the exciting news of which tier we'll find ourselves in for lockdown measures, which is coming out on Thursday, but with Brexit trade negotiations ongoing. I suspect we'll have some quite big news within, say, 2 or 3 weeks, one way or another. We'll either get some form of trade agreement or it will be confirmed there will be no trade agreement and that we really have to prepare and get going to work on WTO trading rules. Something else that Andrew Bailey commented on when he spoke to this Treasury Committee was that they are looking now at where the leak came from in the Bank of England ahead of its announcement that it would extend its bond buying programme of quantitative easing by a further £150 billion earlier this month. He said, "What we have to assume is that it was a leak, and we therefore have to try and get to the bottom of it. And this was a leak made to the Sun newspaper. It came ahead of the official announcement from the Bank of England's Monetary Policy Committee that they would be buying an extra £150 billion worth of bonds. It's important that these things are kept completely secret before the announcement, because a bond buying programme of that magnitude, that can move markets. So a leak to the Sun newspaper, really bad news, and a bad show from Bank of England. So important they get to the bottom of that, work out where that leak came from. It's not like a Downing Street leak, which we can sort of excuse because that's the way politicians play politics. This is Bank of England officials leaking market sensitive information before the official announcement. So that official investigation now underway. And one last point on the Bank of England before I finish this video, and that is when they had their Monetary Policy Committee meeting earlier this month, they revised their economic forecasts for the UK for this year and for next year. However, those revisions came slightly before news of several effective COVID-19 vaccines, which are likely to enter production at the start of next year, maybe even as soon as December. And as a result, we would expect the Bank of England to revise upwards their economic forecast for next year. So earlier this month, they forecast the UK economy would shrink this year, 2020, by 11%, before growing next year in 2021 by 7.25%. The vaccine news, I believe, is positive enough for that 7.25% uplift forecast next year to be revised upwards. So whilst they were quite pessimistic at their MPC meeting at the start of this month, and they actually revised their economic forecast down for this year and next, hopefully the vaccine news will lead to a little more optimism looking ahead. Do you agree with Andrew Bailey's comments and forecasts when it comes to the long-term economic impact of a no-deal Brexit? Let me know in the comments below. I'd love to hear from you on this one. Please do subscribe to our channel, press the like button too. That helps us with the YouTube algorithm, helps more people discover our video content in the future. I make videos here about economics, personal finance, investing and happiness, and always I would love to hear your ideas for future videos, so leave me a note in the comments down below on that too. Until next time, thank you for watching this video. I'm Martin Bamford, and when it comes to your money, the more you know, the faster it can grow.